Joining me now is Michelle Snyder, Managing Director of the Market Gauge Group. Hi, Mish. Thanks for being here.
Hi, Alicia. How are you?
I'm doing good. Thank you. So we have this inflation, highest inflation numbers since Jimmy Carter was president in 1981. The White House tried to get ahead of this really bad economic news with a statement trying to put a positive spin on it, saying the new inflation numbers do not reflect the substantial declines in gas prices since mid-June. So it's down about 40 cents since then. Basically saying this inflation report is out of date. What do you think?
Well, there's a few concerns and maybe a couple of bright spots, although more concerns than bright spots, unfortunately. One of the areas that went down in the core CPI was actually wages and mortgage applications, which is not something you want to see in an inflationary time. And so also, the core doesn't include food and energy. So if we just look at the CPI in general and we focus on the oil and on the food prices, we have seen a decline, and this is the one hopeful thing, of 18% from the peak, but at the gas pump, the decline has only been about 6%. So it certainly hasn't caught up. But looking forward, even OPEC themselves are saying, listen, we have shortages in the refineries. We don't know how much more production we can have. And if demand continues to rise, which it will, we've got the summer, obviously, but also China has now back to lockdowns in areas might come back. We see more demand with the inability to create enough supply to keep it going. That's really where you start to hear people talking about an energy crisis going forward. And of course, that would be one of my biggest concerns as well. But we have seen, Alicia, some prices come down in the commodities sector, certainly copper and steel and wood and some of the food prices. Now, 20 to 40% moves in commodities is not completely abnormal considering how volatile commodities can be. So the question is going to be going forward is what happens, like I said, with production of oil and demand, and then what happens with weather and food. Crop reports just came out, USDA, little bit better than it had been, but still with that caveat that if we have some really severe weather coming as the summer continues, that could also impact the crops in a situation where we've already had food shortages. So yeah, it's kind of messy out there.
You'll remember when Biden took office, inflation was around 1.4%. The president blamed global turmoil in a post-lockdown world for the current inflation here. He also pointed out inflation is high in other countries too. So there you have it, right? There's nothing we could do.
Well, all right. So first of all, yes, it is definitely high in other countries. Spain also came out with tremendously high numbers. Italy, Germany, we know is completely having issues. So it has been a global situation. But we have something else, which is the Federal Reserve. And I think this, to me, that and the dollar are the two X factors we have to look at here. The Fed, now they're saying 75% priced in. They're going to go 1% higher on their next meeting in rates. That's a possibility. But we also know that if we're talking about what we just talked about, food and energy being in short supply because of things beyond our control, that's not going to do much except potentially drive us into more of a recession. And of course, hurt people even more as they have to pay higher interest rates. On the flip side, if they're not aggressive enough, then they can spur the inflation even more. So you've got kind of, unfortunately, this sort of perfect storm with the global situation. Then you had geopolitical stuff going on. You had revolts in so many places this weekend, Peru and Libya and Sri Lanka. So it's a tough time. But look at the market right now. That's the one maybe breath of fresh air. We're holding the lows. We actually have seen the TLTs, the long bonds, move up, which means yields have come down. And we're seeing some buying coming in at this area. So hopefully maybe this is all looking forward and the worst is over and things will get better. That's what we can hope for.
Yeah, positive outlook. So just real quick, Trading Economics says 5 developed nations have higher inflation than us. Spain, Brazil, Russia, Argentina, Turkey. That's it. So Republican lawmakers say the record surge in inflation is due to the government overspending, paying people not to work, throwing too many dollars at too few goods. Biden's energy policies, war on fossil fuels. Now, these lawmakers also say we need to increase production of supplies here in America, including oil refining. Your thoughts?
Well, absolutely. It is unfortunate that when, after COVID, it was obvious that we were going to get into this incredible surge of demand with low supply, which has been in the works for a while now, by the way, because it's just commodities in general. When you have things really cheap, as they were, goods were really cheap for a long time. Metals were cheap and food was cheap and, wood was cheap. Once that happens, what happens is they cut back on production, and that's when they got caught with COVID and then supply chain and then labor. And that's part of what happened here. But as soon as it was obvious that we needed help, we do have reserves. What makes the United States unique is a couple of things, besides the fact that we're rich in natural resources, is that we're also very relatively protected because we have two bodies of water on either side and two friendly borders to our north and south. We could do more, there's no doubt about it, and hopefully it's not too late to do more. That's what we have to hope for.
Yeah, we could still do more. Maybe that's why 88% of Americans think this country is on the wrong track right now. All right, what will the next rate hike look like? You said it might be as high as 1 point. And what's your inflation prediction for the rest of the year?
Well, I do believe that maybe we have, if not peaked at this 9.2%, close to it. Because we've had the ability to produce more food, for example, in that area. I'm not sure what's going to happen with energy. And of course, it's hard to predict what happens with geopolitics. But in terms of the Federal Reserve, I would imagine right now they really have to weigh, what do they want to do? Do they want to put a kibosh on the areas of inflation that they can with demand destruction, or do they want to send us skidding into such a slowdown where we go into recession? So I don't know, 1% might be a bit rich. Maybe we're going to look more like the 75 basis points like we did last time, and then we'll see what happens from there.
Right. Michelle Snyder, Managing Director of the Market Gauge Group. Thanks for your time today. Appreciate it as always.